Next off, I'm going to be introducing Henry Lazenby, who is going to be doing an interview with Tony Makuch. And hopefully, I know Tony's been in the news for a lot of other reasons lately with Agnico Eagle, but we did invite him to talk about the research and development that they've been doing at their mines to help a lot of the suppliers progress their new innovations. So for Henry, he is an international journalist with over 10 years of experience heading up the North America-focused resource news desk for different multinational media houses. Back in his native South Africa, he is an award-winning community journalist before the B2B media market exposed him to mining. A secondment in Toronto soon became permanent, and along with frequent visits to mining and exploration project sites, he specializes in covering North American and international mineral exploration, mining, and metals markets. He is now based out of Vancouver, and he writes and produces multimedia content for mining.com and the Northern Miner. Welcome to the show, Henry, and you are going to be throwing over with Tony.
Thank you very much for having me on board, Robert. It's my pleasure to be moderating our next segment featuring Kirkland Lake Gold CEO Tony Makuch. Do we have Tony online with us?
We do, and Tony, if you're there, you can just start your video in the bottom left-hand corner using the icon there.
Perhaps while we wait, I will continue to introduce Tony. Tony is the president and CEO of Kirkland Lake Gold. Prior to joining Kirkland Lake in July 2016, Tony was the CEO of Lakeshore Gold Corp and was largely instrumental in building Lakeshore from a junior explorer to a low-cost gold producer with quality operations. Tony has a proven track record of leadership in the gold mining industry. Kirkland Lake, under Tony's leadership, along with a strong management team, is creating significant value for its shareholders through its portfolio of high-grade, low-cost assets in two of the greatest mining jurisdictions in the world, Canada and Australia. And of course, that's set to all change soon, and we'll get into that in just a moment. Tony holds a Bachelor of Science degree from the University of Waterloo in Ontario, and both a Master's of Science degree in Engineering and a Master's of Business Administration from Queen's University in Ontario. Welcome, Tony. It's great to have you with us today.
Thanks for the introduction, and it's nice to get the opportunity to talk to people. You know, I know it's always being done online, but it'd be nice to be able to talk, see people in person. But hey, we're getting used to the online stuff. I guess the only safety thing we should think about when we're on these online every now and again is we are sitting lots, so everybody every now and again get up and walk and stretch. Doesn't hurt to do a couple of lunges or some of that while you're sitting at your desk, and nobody turn your camera off, nobody will see you doing the exercises. So that'll be my
right, well, with that health and safety tip, let's all get stretching and stretch our ears for the next segment. I think Tony is going to share with us some valuable insights into the senior gold space. Just a little bit of a preface. The timing of our talk today is quite remarkable. When I first started preparing for this interview, I was considering questions on all kinds of general industry trends and topics. That was until the news broke about the industry's next merger of equals, Kirkland Lake and Agnico Eagle, to tie the knot, to create, to at least some analysts' mind, one of the most ideal gold companies out there. Kirkland Lake Agnico Gold will be the third largest gold producer in the world, with both in terms of market cap and production. So to start off our conversation, please, would you just walk us through the key details of the merger as it was announced? And as a second part of that, let's look at exactly how it translates into value for shareholders, please.
Okay, well, I mean, as you mentioned, from our perspective, these are logically two companies that do make the most sense from a merger of equals perspective, because it's a strength on strength transaction. You're putting together two of the industry leaders in the gold space who demonstrated track record over the last, at least if you look at the history of Kirkland Lake Gold, the last 5 years in growing per share value year over year. As you mentioned, we'll be the third largest company from a gold production perspective at 3.5 million ounces a year, and ability to grow that. But it's not necessarily about trying to be the third largest or largest in gold production. It's all about creating an industry leader, and it'll be the industry leading company in terms of the lowest unit costs. Well, we see all-in sustaining costs somewhere around, $810 to $820 an ounce, and we see by addressing synergies and some other opportunities, we think we can drive all-in sustaining costs below $800 an ounce for the company. So definitely an industry leader in that perspective, but also from that and investment in capital programs, so we'd be the highest margin in the industry. So highest margin, with highest margin means for more or less could be highest profitability, definitely industry leading profitability, one of the most favorable risk profile, right, in the industry, and I think some of the most important parts, and this is part of the fit we had when we talked with Agnico Eagle, and I talked with Sean Boyd, is it's industry leading, a lot of similarities in culture and best practices and motivation to not only demonstrate, lead, and pursue best practices in people management, environmental stewardship, social license, corporate governance, and then getting back to it, having industry leading return for shareholders. So it was a unique opportunity to create a quality senior gold producer. It is something that when we talk to shareholders, at times people are talking about the need for consolidation. Sometimes consolidation is being done just to correct the problem, where you have one company that has some assets that are under duress, and another company that has some strength, and you put it together and you make a stronger company. This is one where you had two companies that did not need to merge. You both had a lot of strength, but by doing that, we unlock new value for shareholders. So we talk about the synergies. The synergies are actually really opportunities that you create by doing this. So it's about sitting there saying, within Kirkland Lake Gold, we have lots of catalysts, and we're going to create a lot of shareholder value by ourselves over the next few years as a standalone company, and similarly with Agnico Eagle. But by putting both companies together, we move value forward a number of years, and by moving value forward, you create you create new opportunities for people today. And we see especially in the Kirkland Lake region, the ability to even build new mines in Kirkland Lake, and leveraging infrastructure and leveraging people and opportunity. Again, it's all about trying to create value and create that it's creating definitely a new value proposition for the industry, but also when it comes to ESG or perception of the gold mining in terms of the global investment market, we think we got a unique opportunity to maybe enhance the perception or change the perception of what gold mining is, and that these can be profitable businesses that are responsibly run, that are leaders in as we talk about, in areas of people and social license and environment, that we are actually the good guys, and good guys are good girls too, and then something that everybody would want to invest in, and we recognize you compete in the investment climate for not just you got the gold the gold bugs out there, people who invest in the gold space, but we recognize you invest in a global market, and you invest and you compete against maybe I'm a little bit broad when I say, but you compete against Amazon, you compete against Coca-Cola, you compete against Walmart for investment dollars. If we can be a company that shows industry leading earnings, not only for our industry, but even from a value perspective, and demonstrate sustainability, demonstrate responsible stewardship in a lot of the different areas, that just happens to be a gold miner. So it's a really good investment for people. That's what we see this as being, creating that stronger company. Right?
Wow, that was such a comprehensive answer. You've basically covered off all the other questions I had for it.
Sorry about that.
But nevertheless, so coming back to the expected synergies among the assets in the portfolio, if you take a look at it, many of Kirkland's and Agnico's operations in Ontario and Quebec are within close proximity to each other. So just to unpack this synergies a little bit more, you have Agnico's Canadian Malartic, the LaRonde, and the Goldex mines on the same gold belt as Kirkland Lake's Macassa, Holt, and Detour Lake mines. Could you provide our audience with more granular details on how you expect to marry these assets and extract those greater efficiencies from them?
Well, yeah, so that's some of the pretty exciting things about this merger. So, you know, we everybody in the gold space, maybe we think about the Nevada joint venture between Newmont and Barrick, and for either company, I mean, they produce about 4 million ounces a year. So, you know, from a Barrick perspective, it's about 2.1, 2.2 million ounces a year, and I mean, it's a pretty large number for Newmont. Well, within that, when you mentioned those mines within that region of the Abitibi, it's 1.9 million ounces of production. So it's equal to that, and it's in an area where we already work, and where the majority of the assets we own 100%. You do have a joint venture on Malartic, but there, you know, you own these assets 100%, and there's significant growth in these assets, and that's part of the synergies. And we talk about $2 billion of synergies over 10 years, and a lot of these synergies, yeah, there's, you know, some of the synergies apply to a lot of the areas as a whole of the company. You know, we do have, you know, like, and from a corporate level, their corporate costs, and within Agnico about 110 million a year. Kirkland Lake's corporate costs currently around 50 million a year. You know, we're going to have some synergies, some savings from that in terms of less offices, consolidation of you know, taxation, being able to maximize from a tax point of view, but also consolidation of, you know, whether it's legal fees, just corporate filing fees on the TSX, and you know, those type of corporate costs, insurance costs, we think we can save. So there's definitely those savings, but the rest of a lot of the synergies are really opportunity type savings. So where you're either enhancing the projects with people, you're bringing projects forward. So I mentioned about the Upper Beaver and the Upper Beaver project in Kirkland Lake, combined with the amalgamated Kirkland property, which is just on the east side, sorry, on the west side of our Macassa mine, and we have a surface infrastructure ramp in place there. For another couple hundred meters, we could be developing into that resource, and it's about 900,000 ounce resource. So the ability to leverage the current infrastructure we have at Macassa, develop into that and make a much larger operation there with what's on mining surface that complements what's going on at Macassa. And then the Upper Beaver mine, which it's approximately 10 kilometers to the east from the Macassa property, and that could be a new mine we build. We can take the people that are in Kirkland Lake right now, our shaft crew, etc., help develop that project. And so number one, in terms of developing the project, you get access to people pretty quickly. But some of the other part is you get to leverage infrastructure that's already in place in Kirkland Lake, including we have the whole mill and tailings area, we have the Macassa mill and tailings area. So you have that infrastructure in place that you can leverage to really build upon. And you have the relationships with the local communities, the regulators in the region, and access to people. Agnico's got a significant depth of people. I think it gives you know, it accesses people, and it provides a lot of cross-pollination, a lot of opportunities for people. So you create a company. The part of the synergies is, and we always undervalue what people are, but part of the synergies are being able to attract and retain. Not only attract the best people, but retain the high quality of the people that you currently have in both companies, because you're providing a unique value opportunity for the people. I think that's a big aspect of the synergies. Definitely there's synergies in terms of supplier synergies and procurement stuff, but you know, a lot of those things, you know, I think both companies have been very, very good in terms of what we do there. And in terms of extracting a little more percentage out of our suppliers, I mean, those are things that you have the opportunity to do. But you know, to me, the biggest part of this is developing these operations in Kirkland Lake, which, if you look at the current plans from that could be in place, and some of this stuff is still needs to be engineered more, but you can build a 250 to 300,000 ounce a year producer out of Upper Beaver, a 40 to 50,000 ounce a year producer out of the amalgamated Kirklands, complementing what we're already doing in Kirkland Lake. So Kirkland Lake perspective, you can take from a 350 to 400,000 ounce a year mine currently at Kirkland Lake, or 400,000 ounce a year mine at Macassa, and you can complement that with another 250 to 350,000 ounces of production right in in that region. That's pretty significant in terms of what you can create just there. So, you know, you have the opportunity to do some significant growth in the Abitibi. And then I see from an idea perspective, and sorry, maybe that's why sometimes you get pretty excited what we can do from a mining perspective. But you know, we have plans for what we can develop at Detour. We have significant exploration success at Detour. We see the ability to grow mill throughput and mine production in the open pit at Detour, but we've identifying a fairly large near surface resource. We've added another 10 million ounces of that resource just recently, but it continues to be open on strike. It continues to be open at depth, and then you can apply some industry best practice, especially what Agnico is doing at Goldex, and we may be able to complement both open pit mining and underground mining at Detour and really build upon it. So, you know, that's just in the Abitibi. I mean, I can talk to you about the other regions, but you know, I see just in those applications around the Kirkland Lake assets in the Abitibi, you can see some growth. And then I do see growth and from an exploration perspective and technology perspective being applied based on a lot of what Agnico is currently doing at the LaRonde project. We in Kirkland Lake, we made a commitment. We've been partnering with Rogers Communications to build a private 5G network at Detour, and we're trying to build a 5G network underground at Macassa. And then, you know, from that, then, you know, to digitize and instrument our equipment, instrument our mines, try to make these start instrumenting the mines, and then go to the next step to building smart mines. And whereas with Agnico, they've already got the underground infrastructure in place for a private area network at LaRonde, and they've been working on, they're a step ahead in terms of getting everything digitized and automated. And now you have and they're working towards doing basically the artificial intelligence are building these into smart mines. So we take something where, definitely we could do it ourselves. It might take us 3 to 4 years to get there. And you sit there and say, by putting the companies together, we're able to take that in terms of what's happening at Macassa and Detour, and maybe move that ahead by 2 years. And again, these are things that are value creating. I mean, if we can reduce costs quicker, we can reduce costs. Either produce the same amount of gold for lower costs, so higher margins, and then from that also add gold production at lower costs. So, you know, further gold production at lower costs. These are real synergies and real new value creation that you bring forward. So it's pretty exciting in terms of that from the synergies perspective. And I'm sure over time, as we unlock the people, right, between the two companies, and you start sharing data and information, there's more that's going to come out of it than even what we're talking about. So.
Well, thank you very much for those comments. It really gives you a sense of how comprehensive a deal of this magnitude really is, and you know how wide it reaches and affects everybody. So, still on the asset level, several analysts with whom I have interacted with about this deal on behalf of the Northern Miner and Mining.com have generally raised two risk factors they see going forward. I mean, the consensus holds that Detour Lake would probably not hit its operational guidance targets this year, with some analysts suggesting that the guidance is too optimistic. And then others are pointing to the declining production profile at Fosterville. How would you respond to these two risk factors, and how do you see the company will offset them?
Well, you know, first off comes to Detour. So, you know, when we did the acquisition of Detour, actually, I'll go back to when we did the acquisition of Newmarket back in 2016 with Kirkland Lake Gold. We had a lot of analyst perspective saying, you know, why did we do this? And it was a mine that was targeted to produce 135,000 ounces that year. We were able to, you know, the mine achieved about over 150,000 ounces that year, and then it grew its production from 150,000 ounces in 2016 to over 250 in 17, over 400 in 2018, and 600,000 ounces in 19 and 20. And you know, a big part of that, it wasn't by good and by golly, it was through investment in infrastructure and significant investment in exploration and drilling, taking a view on the geology on that we were seeing at Fosterville and what you can do with that, and how that grew production. And then, once we got to that 600,000 ounce a year mark, then you look at it and say, geez, it's a big challenge in terms of replacing reserves mined year over year. Maybe we got to take some of the pressure off in terms of what the people can achieve. And I mean, and Fosterville is going to definitely exceed its guidance for this year. And you know, I think you're going to even in terms of guidance we've given out for the next few years. I mean, it's it requires continued exploration success. We're exploring very aggressively at Fosterville, and we see that ability to continue to replace reserves mined. But our goal now at Fosterville is build something between a 300 and 425,000 ounce a year production operation that's more sustainable, take some pressure off, and then you can focus on cost. So that's Fosterville. And so now Detour. So yeah, we acquired Detour in actually in 2019. We talked about Detour that said, well, we thought we could, a couple of targets. We said we think we can get production to over 800,000 ounces per annum. We said we think we can see all-in sustaining costs going, so production growing from about 500 to 600,000 ounces a year to about 800,000 ounces a year. We've seen all-in sustaining costs going from $1,150, $1,200 an ounce down to $800 an ounce. And we've seen the ability to a big area from an exploration point of view. We felt very quickly we could grow, we can identify another 10 to 15 million ounces of resources and then have significant growth in reserves at Detour in a short period of time. So these are some short catalysts. So what have we done? Well, in terms of production and production forecast for this year, we put out a new 43-101, which is a subset of what we're going to be putting out again in 2022. But in that 43-101, it shows production growth of over 680 to 720,000 ounces this year. We will definitely be over 700,000 ounces this year, and maintaining that production level for the next few years as we grow to 800,000 ounces a year by 2025. Then there's a dip, but that dip is related to grade and sequencing in the pit. Now with the updated resource and the work we're doing to the saddle zone and to the west, we see being able to add to the geography of what's being developed on surface, and so be able to sort of smooth out that low in the curve. But then we do see growing production to over 900,000 ounces a year and being able to maintain that. I mean, I guess in terms of guidance, we're definitely on track to achieve our guidance, and based on also what I mentioned here, the 5-year guidance for all-in sustaining costs is like $775 an ounce. So we delivered on all those areas around Detour. I know there was a lot of doubters from Fosterville. There's a lot of doubters from Detour. Again, you can see that we've been able to invest very wisely into the asset, and in terms of getting it to where it is, and we see it being a world-class operation, and lots of exploration upside in terms of what we've been able to demonstrate from the near surface mineralization. But I'll say this, with Detour, we probably still haven't found the ore body yet, because I think there's significant upside at Detour. So yeah, in terms of sizing mines, and maybe at Fosterville, in terms of the mine sequence, in terms of what we produced at Detour, at Fosterville in 19 and 20, if we could, when you looked at, is that a responsible, sustainable level of production for that operation? We say, maybe so some things we learned over the period of time, but still, if Fosterville produces 425,000 ounces a year for the next 7 to 10 years, because that's part of our goal, is to demonstrate that type of guidance with our exploration, that we're money that we're spending, and we're spending almost $90 million in exploration at Fosterville this year, and we'll probably be doing the same amount in 2022. If by doing that, it's still one of the lowest cost, most profitable. That's the lowest cost, most profitable gold mine globally, definitely, and with definite growth. And with Detour, as we see Detour building it into one of the largest gold mines, and definitely in North America. Anyway, so, I mean, I guess that would be, how do you answer it in terms of that? I guess it's how we move forward, and then in the new company, how do we move these things forward? And the new company, which has, I mean, a lot of other operations, a lot of other mines where we see significant exploration upside and significant potential for growth in production from those assets, and lower costs, again, by investment in exploration, investment in growth or infrastructure that helps reduce costs, investment in equipment, investment in people, and what you can build from these assets.
That was a great answer. Thank you. I think the analysts must go and rethink some of their projections and theses. So just segueing on from your last comments, the company has been investing many resources into research and development. And so can you please speak a little bit about the role that technology and this R&D work plays in unlocking synergies and value for shareholders?
Well, that's a good question. I mean, there's a lot of aspects about you know, first off, technology. I mean, there's technology and innovation is a big part of what we see coming forward in terms of adding value. Part of it is in terms of you know, being able to lower unit costs or do things safer, more responsibly, right? You know, so we're definitely on the track to from a technology point of view in terms of building smart mines. I think there's a lot of value there in building smart mines, and they're definitely going to be safer. They're better for people. It doesn't mean that we're going to, by building smart mines, it doesn't mean we're going to create less jobs for people. We're just going to have people doing different jobs, right? There's going to be different skill sets of people. And I think that's pretty exciting from a people perspective in terms of, you know, the growth as a person and what you can do over the years. But, you know, you know, part of our commitments, we also make commitments in terms of reducing our greenhouse gas or our carbon footprint and our operations. And a big part of reducing carbon footprint, yeah, we can go to alternate fuels, etc. But innovation, looking at different methods, looking at different ways that we do things, has lots of opportunity in terms of helping us to achieve that, in terms of reducing our carbon footprint, looking at ways to be more efficient there. And that's innovation and technology that helps you. You know, another thing, and you know, we talk about you know, maybe from a simplistic perspective, and I talk strongly about our you know, how we explore and why exploration is a big part of value driver in terms of our industry. And that's part of discovering new deposits and new gold deposits. But there's a lot of deposits around, and I'll speak about the Abitibi. You know, and if I look at what I see at Agnico's assets, operations at Goldex, which is a large bulk low-grade deposit in northwestern Quebec, and LaRonde, which is somewhat of a, you know, a sulfide-hosted refractory deposit at LaRonde, and you have mills and mining methods to extract those. If I look at what we're doing at Fosterville, the Fosterville mill is a BIOX plant that also does conventional gold extraction through conventional methods. So it's a very versatile plant. And then you look at what we have in different regions, especially in the Abitibi from an exploration point of view. You know, we see a lot of similarities to Goldex style potential Goldex style potential resources that can be identified deposits. Similarly, we see potential for refractory style deposits in northeastern Ontario. So part of from a technology point of view, you have processing plants and metallurgical plants that you can take advantage of you can look at these deposits more effectively and be able to now mine them if you discover them. So part of it is, what I'm getting at is fundamental mining 101. When you went to university, the first day the professor writes on the board, ore is equal to rock that can be mined at a profit. So we find a lot of deposits with just nice, not a lot of nice looking rock with gold in it, but it's the technology and innovation and the people that takes those deposits and turn them into ore bodies. And that's how we do that, by lowering costs, lowering cutoff grade, increasing throughput that lowers costs and lowers cutoff grade. And you know, I think that's so again, from the reason why we want to invest in technology and innovation is because God put these deposits there. We didn't, right? We can't just pick whatever we find, but we can take these deposits and turn them into ore bodies and profitable mines that we create a lot of prosperity for people, but also a lot of value for shareholders and for people as a whole in the various regions by being innovative, right? By adopting new methods and looking for new ways to do things.
That certainly, technology seems to be one of the the new strengths of the new company. So we'll be monitoring that very closely going forward. I just wanted to circle back to the new company's risk profile. Certainly when you look at the top two gold miners, Barrick and Newmont, they have exposure to what one could term these days as more riskier jurisdictions in Africa, South America. I'm sure there must be something to say from your perspective about the new company's risk profile and how that would appeal perhaps to retail investors that continue to appear to sit on the fence really about mining and whether it's a worthwhile industry to even invest in. How would you respond to that?
Well, first and foremost, I know we might sit there in Canada, or we might sit in Australia, or in our parts of the world, and we might sit to say, we got a lower risk profile compared to Africa and Latin America. It probably, if you're African or if you're from Latin America, you might not think these are high risk areas. It's part of it is perspective, right? We might think they're high risk from our perspective, but maybe if you're from there, they're not as high risk. So that's different. But in terms of us as people, these are definitely low risk for us, because first off, like just say the Abitibi, and even and producing 1.9 to 2 million ounces in the Abitibi, Northeast and Ontario, Northwestern Quebec, it's an hour and a half plane ride from Toronto, right? And it's in an area where we have in that collective area we have probably 2,500 to 3,000 people employed: engineers, geologists, accountants, technical people, legal people. We understand the regulatory environment. We have miners. We have people that know how to work in these regions. So the risk is fairly low because it's an area we can execute, and it's all in our time zone. In Australia, we have we're definitely in a country, again, has similar in terms of a regulatory environment, similar operating practices of what we have in Canada, and we just happen to have a very, very good team of people working there. So from a risk perspective, you have an operation that's been established for a long time and get very good people, and you understand regulators, good relationship there, and a very high standard in terms of similar standards from a culture that we have in the company or leading in Australia. Again, from people's health and safety, social license, community support, building long community environment, stewardship, etc. in the region. And then when we look at Nunavut, and what we got, what the new company have up in Nunavut, and definitely sort of lots of excitement in what can happen up there with people. And then I would sit there and say Finland is is a great country to work in, and the areas within Mexico we are a great country to work in. So yeah, from a risk perspective, we see a lot of our assets are in favorable regions, but they're favorable regions from our perspective, number one, but also favorable regions because what's really good is in Australia, we have a strong team of people in Australia that are Australians mining or operating in Australia. And some of the similar things themes I've seen with Agnico, which again made a good fit. In Mexico, the people running the Mexican operations are from Mexico. They're good, solid, honorable people with the same ethics, the same from that perspective as we have. And similarly in Finland, you have a very strong team of Finns running Finland. So, always risk is something we have to manage. You have to know what's going on, and risk can be taken. You can take in a lot of different ways. So, I used to sort of take something, and maybe some people wouldn't have seen this, but I know in Canada when you were flying when we could fly before COVID, and you were walking down the tunnel to the plane, they had a picture of a broccoli. And they had the picture good, and then they had another picture beside it that said bad, right? And depending on your perspective, that broccoli is actually really good, or that piece of broccoli is not very, very nice to eat. So, again, all this stuff is taken with a grain of salt in terms of what country they're from. But I look at it from a risk perspective in terms of, where do we get our people from? What can we do with people? How do we understand where we work in? Do we have the same standards of work that they have in those regions? And the way we treat people, and then can we develop people from these areas?
Mm. Okay, yeah, no, that makes a lot of sense. So perhaps moving on to a few more general questions, if I may. Let's just in general terms discuss how the mergers and acquisitions opportunity or landscape rather looks like for the majors and mid-tiers at this stage. Do you feel that there is still more opportunity for consolidation? Either to extract premiums or on the non-premium basis as you followed now?
Well, yeah, I mean, first and foremost, I guess from an M&A perspective, I know Kirkland Lake has come from effectively the consolidation now of 4 junior companies to make a stronger company. So you can see the track record of making stronger companies and stronger balance sheets. It definitely can be done if as companies get larger and be able to look at things from a larger perspective. Definitely now the combination with Agnico Eagle, we've actually taken effectively, it would be like taking 7 public companies, turning them into one. So there's a lot of value in mergers, and I wouldn't sit there and say, you know, I wouldn't I wouldn't be honestly saying, you know, M&A is overrated, etc. Because, you know, I think we've demonstrated what we've done up to now with Kirkland Lake, that you can create a lot of value, and going forward with this combination with Agnico Eagle, we can demonstrate a lot of significant value going forward. So if M&A is being done to create value, then I think that's what people should do. If it's being done to just create exits for people, or, you know, create cash out, or get a way to solve a problem, sometimes, you know, I think we should all, you know, sometimes that's done properly, and sometimes that creates a strength, a better company, but sometimes that's just, you know, the different things that to sort of maybe try to take advantage of. It's an opportunistic way for people to get personal gain. On the other side, you know, there's a lot of times when you have companies, and maybe we got to make sure we don't have entrenched management. You know, the companies belong to shareholders. We can always get another job if we need one. But you know, so from an M&A perspective, if you can put companies together, and I you know, I see other regional areas that can happen, and there's more regional stuff that even we can do in the new Agnico Eagle that I think can help build a much stronger company, right? And much stronger value for shareholders. So, you know, so I see that investment landscape being there. You know, when we talk about premium deals or non-premium deals, I mean, it's always hard to look at that. You're looking at the value that might happen if you can unlock it. You know, so I mean, making a premium deal, you have to make a bet yourself that you see value that others don't see. It's hard when, you know, I look at it and say, look, if I want to buy your car from you, I'm not going to buy your car from you and pay you for the value that I'm going to bring to the car. I think that should be something I create. But if I think your car is undervalued for you, and it's not understood, then yeah, you know, you want to treat people fairly. But so you know, premium's always something you gotta kind of watch out. I look at you know, if I were to sell Kirkland Lake at a premium, I'd be kind of admitting to the world that, you know what, it's not good enough. We haven't extracted the value that we think we can get for you as a shareholder, and we're putting it into a better team, as opposed to saying, you know, and especially when we do this as a merger of equals, we're saying, you know, we put these two companies together, we can make more new value for you by making a stronger company. So I don't know, is that a good answer, or that's kind of around?
It's perfect. No, that does answer the question, absolutely. But I've got another question for you that segues into that. So in general, how would you consider the majors and the mid-tiers' ability to, in fact, discover new ounces through the drill bit? It wasn't long ago when you know, the concept of peak gold was floating around. That has been dismissed since with some prejudice. How do you view in general the industry's ability, you know, to discover and create value through the drill bit, which some consider as the venue to create value?
Well, I mean, first off, if you looked at when we formed Kirkland Lake Gold, and we created you know, we wanted to create our logo, and I mean, Bindu, my assistant, she came up with the idea on the logo, which because you know, recognize we've got a strong, you know, you got to, as a company, you got to focus on the areas that, from my perspective, in any business, if you make hamburgers, you got to like eating them, and you got to know how to cook them better than anybody else. Man, we from producing them right up to cooking them. Same as in our industry. If we only focus on mining out the ore bodies we have, we missed out on all the opportunities. So we have to be really good at exploring and finding new ore bodies. We have to be good at developing and building the mines to turn these deposits into ore bodies, and we got to be good at terms of operating these ore bodies, both from a profitability point of view, but also from a sustainability point of view. So So exploration is part of really part of exploration. It's a business. You have to understand the geology. You have to understand the deposits, what you're looking for. You got to make sure you're doing it to not just look at, from a mining company perspective. We're not just looking for deposits. We're looking for mines. So you got to look at it from that type of a scale in terms of how you're going to find these deposits and what you can do with them. And so, I think, on the exploration side, that's the one true way we create value from pretty much nothing, right? That's where we, if we can discover an ounce of gold for $5 to $10 an ounce, which has been track record within Kirkland Lake and even within nickel, and then convert that ounce of gold into a resource and then into a reserve for $100 to $150 an ounce. We've just created a whole bunch of value by looking and figuring things out with a diamond drill bit. So I think whether you're a junior company or whether you're a major company, I think the larger companies still have the ability to have the ability to explore and extract that. Part of the whether they're done at the corporate at a large company level or whether they're done in the junior company space. I mean, sometimes they're high risk dollars, and sometimes it's how you finance it, how do you move forward for discovery. That's a whole nother topic. I mean, how you track your costs, where you invest your dollars, right? And how you're able to attract investment dollars. Sometimes there's a lot of high risk money that goes into junior exploration companies, right? And you never want to take away from that. But I guess on a nutshell, I don't think ever within Kirkland Lake Gold and the new Agnico Eagle, I would say, we're always going to be aggressive explorers, exploring into your own properties, looking for discoveries around your own mills and your own infrastructure. I think that's something you got to always do, because that's important in terms of enhancing shareholder value, and we have the capital resources to do it and build a team up that keeps focused on doing that. As long as we can continue doing that and keeping that as a separate business, have it run as its own type of business perspective, I think we'll be successful. So, and I think the other companies can do it too, right?
Yeah, certainly. Okay, I'm going to open up the floor for a question from the audience. Anonymous asks, what do you see as your future needs? For instance, will your mines be all electric, or is there anything you would like to see developed that would solve a particular problem you face?
Well, okay. Well, I mean, a big challenge or always future needs is people, right? And we're talking about innovation. We talk about changes in how we do things. So it's when there's access to people, but access to people and the training and development of the skills that those people. So that's a challenge and an opportunity. I think that's one area we need to work on. I know over time we definitely the electric mines. Electric mines. If we can get away from using diesel and having people exposed to diesel emissions, especially in underground environment, definitely if we can move away from, we committed to reducing our carbon footprint. So a lot of that in terms of converting to electric, it has some benefits, but you got to ensure that the electric generation is green electric generation too, which we do have in Canada and Ontario. So we have that opportunity. But the advantage to electrification and part of the advantage of what I see is happening, especially when we went to battery powered trucks, they're already computerized in terms of running. So now there are computers on board of this equipment. And because you got computers on board, you have instrumentation, because you have computers and instrumentation reading the computers. Now all of a sudden you're starting to learn the things. Now all of a sudden you create a smart piece of equipment, and now you tie all these smart pieces of equipment and smart sensors in throughout the operation, and you create a smart mine. So I think that's a big opportunity. And I guess the challenge is sometimes trying to keep up with technology, or trying to have technology available and keep it up and bring it into the forefront. There's a lot of things that happen out in industry and being done in the world that, as mining companies, maybe we don't take advantage of, or we don't adopt. And part of the reason why sometimes in mines you don't adopt these changes, because it might require a large capital investment. If I want to invest in new interest, let's say I want to invest and I'm going to spend, you know, a significant amount of money investing in say at Macassa mine. If it's a 5-year mine life, there's no payback. So that's part of when we do the exploration and the development, and we extend mine life and grow resources, reserves, extend mine life. Now you got a 20, 30-year mine life. Now you can, you know, you have the ability to invest into these operations in terms of technology in order to take advantage of that. I mean, it's the same in terms of our carbon footprint, in terms of, yeah, we can get to net zero by closing all our mines, but we want to get to net zero by operating our mines, turning them into electric mines, turning them into smart mines, you know, and moving forward. So
yeah, all right. Perhaps I'll just stage one last question before we close. The new entity, Kirkland Agnico, has set itself a goal of achieving net zero carbon emissions by 2050 or earlier. We've touched on this a little bit earlier when we spoke about technology and its applications, but perhaps just unpack for us again how the new company plans to achieve this this lofty milestone. It certainly is a milestone with certain magnitude, if I'm hunting for words there. I wanted to add a second part to that question as well. And so how do you see ESG investment principles changing the investment landscape when it comes to gold miners? Does it add investor value, or are they at odds with each other?
okay, so in the first one, I mean, how do we expect to achieve? We made a commitment, and within the new Agnico commitment to net zero by 2050 or sooner, right? And then I can tell you what part of our commitment, and we have, you know, we'll have 12 operating mines today. You know, maybe they won't all make it to 2050, but our goal is that at least half or 3/4 of them will still be around in 2050. So we can't achieve that by mining out the ore bodies and shutting it down. So our, you know, how do we get there? Well, first and foremost, you know, I think number one, you got to understand what your carbon footprint is. So we've been going through a lot of analysis, looking at what is our carbon footprint at each of our operations, right? Whether it's scope 1, scope 2, scope 3. How does that impact? And then you take it from there. Then you say, okay, now what processes do we do that affect those the carbon footprint in each one of these areas? How do we change each one of these processes? And that's through innovation and technology, and or sometimes it's just doing something different or not doing something. Right? Sometimes we might be buying something that just, or running a generator that, hey, you don't need that generator. Sometimes it's replacement of one thing with another. I know, say up in Nunavut, I mean, you have these remote operations. Detour, we're lucky. Detour is on the grid, and it's a very clean grid from in Ontario. So we're lucky there. But some of the operations up in Nunavut, they're diesel powered generators. So how do we replace them with, and we're going to be looking at and investing in renewable type of sources, and or look at how do we invest and work with government in terms of bringing infrastructure to these places where you can get on grid at some of these places. So that's part of it, bringing technology, looking at solutions. But I think first and foremost, to get there, first off, you got to know what is my footprint, right? What am I doing? Then you look at it step by step, and then apply a lot of principles. Whether it, again, with we can change fuel types, we can change processes. That's the whole concept of innovation and technology, and bringing it together to really get there. So it's not there's not a single way to get there, but there's a lot of work. And then when you mention about the ESG and on the investment landscape, again, maybe I'll look at a perspective. I mean, from a business perspective, we see significant opportunity, and fundamentally, and this is my view. First off, in a mining industry, we're trying to create sustainable businesses. We're price takers, not price makers. We don't control the price of gold, but we got to control the cost of us producing an ounce of gold. And if we can do that and the responsibility and maintain our social license, we can stay going, continue to do that. If we, a lot of the areas in terms of managing, in terms of from an ESG perspective, again, it's, you know, carbon footprint, but a lot of it is technology, a lot of it is people and how you treat people, how we treat the environment, looking at new processes. I think in the end, I don't see that over time that these will be make the investment or they shouldn't be make it cost more. I think as we adopt these ideas and this technology, we should be able to maintain or reduce our current costs, right? Because you're gonna, you know, there's a lot of costs that come in terms of the system, in terms of, you know, interaction with people or you know, whether it's injuries to people, whether it's impacts on the environment, whether it's, you know, how we, you know, tie into our supplies and our supply and support services that come and deliver to the business, and how do we make everything more efficient, that actually we know we can come forward and not only, you know, meet our goals in terms from an ESG perspective, but maintain our industry leading costs and or improve our in terms of costs, in terms of what we do. So, you know, I wouldn't be saying there and say we need to invest in this because it's just going to cost us more, and who cares? We should be, you know, it's sort of like when we were developing the battery powered truck for underground at Macassa mine and dealing with a company out of California, and say, you know, and the Tesla built an electric car that is second to no car. If that was a gas powered car, everybody would still want to buy it. It's a special vehicle, right? So why can't we continue to create special things, again, applying new technologies? And, you know, 20 years from now, you know, people will look back and say it was all easy. You know, 100 years ago, we didn't have telephones, or even 25 years ago, we didn't have telephones. You know, if you look at all the things that have happened, you know, I think, you know, over the next few years, I think it's some pretty exciting times. And I think there's going to be a lot of innovation, a lot of new things that, you know, find out that we can mine gold cheaper, safer, more effectively, more responsibly, and continue to have industry leading returns for people, all stakeholders. Right?
Excellent. We'll leave it there. Thank you very much for your valuable insights that you've shared with us today. That was Kirkland Lake Gold CEO, Tony Makuch.
Thank you very much, Tony. Thank you very much, Henry. And especially again to Tony, I'm sure with the merger, your calendar just blown up. So it was nice that you were still able to make this time and the extra time as well. So,
yeah, so we're
sorry, look forward to following you guys. Thank you.
Take care. Bye.